Good morning. 2020 Form 45CC2 Depreciation and Amortization. How to depreciate a car you use for more than 50% in your business. We are going to estimate you purchase the car in 2020 for $20,000 and use a 60% in your business, 10% for investment and 30% for personal. You are not claiming any section 179 and you elect not to take any special depreciation. So what is the depreciation deduction for the car to claim on 2020 tax return? So since the car was purchased and placed in service in 2020, you are required, let me see here, to file Form 45CC2 for 2020. So we have the depreciation spreadsheet to keep our record. I believe you place in service February 2nd. Okay. So the car name, we just put car 2, but you can name your car any way you want. Cost $20,000, date placed in service February 2020, 60% use in your business. To be able to find the percentage you are using your car in your business, you have to track the mileage. So you'll track the total mileage used in 2020, the mileage used for business, the mileage used for personal, and the mileage used for business. So the mileage used for business divided by the total mileage is 60% in our example, and the mileage used for investment divided by the total mileage is 10%, and the mileage used for personal divided by total mileage is 30%. So the total is 100% if we are correct. So the percentage used for business and investment is 70%, 60 plus 10. So the market value, since we purchased in 2020 and start using in the business 2020, is the same as the cost, $20,000. So the business, the cost related to the business use is $20,000 times 60%. And the cost related to business use and investments is $20,000 times the sum of 60 and 10% or times 70%. So that's $14,000. So the basis for depreciation is going to be the business, the cost related to business and investment you use. That will be $14,000 minus any special depreciation, minus section 179 and special depreciation. So that's $14,000. And we are going to use general depreciation system unless you are required. You are better off using general depreciation system. And the depreciation method, you have 3 options: 200 dB, 150 dB, and SL. If you know you are going to be using the car for more than 50% in your business all the way to the end of the depreciation time, yes, using 200 dB is fine. Recovery period is going to be 5. A car is in 5-year recovery period. If you are not sure, you can look at page 30 of or page 29 of the publication 946. Passenger car has a 5-year recovery period. It will depreciate in 6 years, but it has 5-year recovery period. And the convention is half a year. Because you place it in service in February, any quarter that is now the last year quarter, automatically that's half year convention for this type of asset. But if you have placed in service during the last quarter and that's the only asset you place in service, then that'll be mid-quarter. But the car is the only asset you place in service during 2020 and you place in service in February. So we will use half year convention. Now, what table do we need? We'll need to go to Publication 946, page 69, and that will be Appendix A. The depreciation spreadsheet does not comes with depreciation rate. You have to find the rate in the latest version of publication, IRS Publication 946. The link can be found under free downloads, federal forms and instructions under free downloads at ninasop.com. You don't need to submit your email to access our free downloads. And you'll be able to find Form 4562 and instruction for Form 4562, the link to them as well under free downloads. So Appendix A, depreciation system, GDS. Depreciation method, you are using 200 dB. Recovery period, GDS 5. Conversion is half year. The property class is 5 for the car. Month, quarter, place in service. Any table to use is table A1. So we'll scroll down, we'll put table A1 on our spreadsheet, and you saw it there, and we'll go look for table A1, and that's the first table after page 69. Table A1, 3, 5, 7, 10, 15, and 20 year property class, half year convention. So our recovery period is 5 year, GDS 5 that we saw above. So we'll copy the rate from under 5 year column, and we'll recover the car, the cost of the car, the business and investment use portion for 6 years. But we will use the recovery period, 5 year recovery period rates, and that's 6 rates there, from 20% to 5.76%. So we'll copy that to the rates. A1 is written there, and we'll copy the rates to step 2, year 1 20%, all the way to year 6 5.76%. And the depreciation deduction will calculate it automatically, but it's just taking 14,000, the business and investment costs, times the rates for every single one of the years. So for the last year is 14,000 times 5.76%, and for the first year is 14,000 times 20%. So it's going to take the basis for depreciation times the rates for every single one of the year. And the depreciation balance is pretty much taken for the first year, 14,000 minus the depreciation taken that year. And for the second year, is going to take the depreciation balance in year 1 minus the depreciation taken in year 2 and calculate it. And by year 6, it should be 0. The tax year, you have to enter that as well. After you enter the tax rates and the depreciation deduction is calculated for you, the depreciation balance is calculated for you, the depreciation deduction should match the basis for depreciation for business and investment. If it doesn't, 14,000 doesn't, something is wrong. The formula is broken somewhere, or the rate you copy is wrong. The depreciation balance should be 0 by year 6. If it's now, something is not calculating right. You enter the tax year that you will file and claim those returns, starting with 2020 all the way to 2025. Because it's a car, there is a maximum depreciation deduction. So we enter the section here, but you can find the maximum depreciation deduction on Publication 946, page 50, page 60. And for passenger automobiles. So you can look at the latest version of Publication 946, but this one is 2019. The 2021 has not been released yet as of February 2021. So for maximum depreciation for vehicle occurred after September 27, 2017 and placed in service in 2019. We are going to use that for car placed in service in 2020. So you have the date placed in service 2019. We'll use that row since that's the latest version they have. Year 1, 18, the maximum is 18,100. Year 2, 16,100. Year 3, 9,700. Year 4 and later, 5,700 cc. So if you elect not to claim special depreciation and section 179, the maximum you can claim is 10,100 for year 1. So we enter, so because you are using a partial, that 10,000 is if you are using the car 100% for business. Because you are using a 60% for business and 10% for investment. Let's go back. So the maximum deduction is that 10,100 that you can claim because you are not claiming special depreciation times 70% business use and investment use. So that's 7,070. And the depreciation deduction for year 2 is 16,100. So you'll take that times 70% business and investment use. Year 2 is 9,700 times business use and investment use percentage. Year 4 and later will be 5,700 cc times 70% of business and investment use as well. And that will give you the maximum depreciation based on your business and investment use of the car. So your deduction is the lesser of the depreciation deduction, assuming you are using the car 100%. Now, is the depreciation deduction that we first calculated and the maximum deduction, so whichever is less. So if your car is expensive, the depreciation deduction could be more than the maximum deduction. So in that case, the maximum deduction will be your deduction. But in the case that your car, the business and investment use is 14,000, your depreciation deduction is less than the maximum depreciation deduction. Therefore, your depreciation deduction is going to be your depreciation deduction. So it's calculated here and is 2,800 for the first year compared to the maximum deduction, $7,070. So if I just change this number here to 10,000, for instance, depending on what the car is, you'll notice that your deduction is going to be the maximum deduction because it's less. But I'm going to change that number back. So your deduction for year 1 is what you'll put on Form 2020, Form 4562. Part 5, list a property, line 26. Column H, depreciation deduction. And column I, you will be blank for that because you are not taking any section 179. You enter the car description, the service, the date you place in service, which was February, I believe, and the business and investment use was 70%. The cost of basis was, I believe, 20,000, and the basis for depreciation, business and investment use only was 14,000, and the recovery period was 5. And the convention method was a half year, and the depreciation deduction was 2,800. So that's how you will put the information. We can just put whatever the car is. If that's Toyota, you enter the car information, date, place in service, 20, and I believe, I don't know, but I think in my a lot of time, since my use and business and investment use was 7 days, the cost was 20,000, and the basis for the business and investment portion was 14,000. The recovery is 5. I like to put GDS/5. The method is half year HY. The depreciation was 2,800. I just leave this one blank since we are not taking any special depreciation. So pretty much that's how you complete it. So let's go back here, and the depreciation balance 2 is 11,000 for the first year. So that's pretty much that 14,000 minus 2,800 for the first year, and the balance is 6,720 for the second year, because it's taking 11,200 minus 4,480 that you claim in year 2. By year 6 it should be 0. And the total deduction you are claiming here is 14,000. So we cover the depreciation for a car use 100% in your business, but there is something that I didn't mention is if your car is expensive, you may not recover the cost of the car for the 6 year that you're within 6 years. So you'll continue to claim the depreciation if you are using it for 100%. Let's go back to that option here. That's when you use the car 100% in your business. If you use 100% for your business and the car is expensive to the point that the maximum deduction is less than the special deduction, so that's the maximum deduction that you claim. By year 6, there is a chance that you may not claim the full deduction, the full cost of the car, the basis for depreciation. In that case, the amount you claim in year 6, you'll keep claiming that year after year as depreciation deduction, or the deduction you claim in year 6, whichever is less between the maximum and the depreciation deduction, you'll continue to claim that year after year as long as you keep using the car 100% in your business, until the car you recover the full basis for depreciation of the car, as long as you keep using the car, or until you stop using the car in your business, you stop depreciating it as well. And in this instance, if the car is expensive and you are not able, the deduction you claim, you are not able to claim it, or in this example is when you use a 70% business and investment. Assuming you keep using a 70% business and investment, 60% for business, 10% for investment, and by year 6 you are not done claiming the car because the car is expensive and your depreciation deduction is higher than the maximum depreciation deduction, and you are claiming the maximum depreciation because it's the lesser of the two. By year 6, if the full is less than the basis for depreciation, which is the portion of business and investment, you'll keep claiming the amount you claim in year 6. You'll keep claiming as long as you keep using the car in the business for the same percentage, business and investment. You'll keep claiming that percentage year after year until you fully depreciate, you fully recover the business and investment use of the basis for depreciation, or until you stop using the car in the business. So that's if the car is expensive, the price is quite high and you are using it for your business, and it turned out that the maximum depreciation allowed is less than the depreciation deduction. So the amount you'll be claiming may not total to the basis for depreciation by year 6. Just keep that in mind. But if the car is not expensive, chances are you'll be done depreciating by year 6. Thank you so much for your time. Thank you for watching our videos. Thank you for all of your comments. We thank you for listening to our podcast. And thank you all that subscribe to our channel. I'm Afiavi Libreman, creators of Libreman Consulting L.L.C YouTube channel, Libreman Consulting L.L.C podcast, and in our soap.com our blog, where we have free downloads you can access without join our email list necessarily. We do have a category how to depreciate a business asset, where we have articles related to depreciation, and we have videos on how to depreciate a business asset, how to complete Form 4562 under the playlist 2020 Form 4562 Depreciation and Amortization. Thank you so much for your time. We do have our online stores, including liberdownload.com, where you can find spreadsheets and PDF that you could use to manage your business and your finances successfully. We have liberoutlets.com for resale products, liberlabel.com for custom apparels and stationery, and ninassoap.com for natural products, including soap made out of unrefined oils and towels made out of natural fibers. Thank you so much for your time.